Okay, g'day everyone. It's Scotty from Property, and we're on a Thursday afternoon. So grab a cup of tea and a cookie and sit down because we've got some great info for you. And welcome to everyone who's watching live and, of course, who's listening later on our podcast, our Real Property, Real Wealth podcast. All right, today I'm very honoured to be speaking to Rob Stevens. Now, Rob was introduced to me by a third party mutual acquaintance, and my mate said, "Hey, you got to call Rob. He's in property in Sydney." I went, "There's heaps of people in property in Sydney. What I got to call Rob for?" No, no, no. He does new property. I said, "Well, there's heaps of people that do new property in Sydney. What I got to call Rob for?" He went, "Well, he does it a bit differently and he's not dodgy." I went, "Okay, all right, I'll give Rob a call." So I called Rob and we got on really well, right? And so I figured over the past few months we've been talking off and on and had the Christmas break and what have you. And we're starting back with all these lives, and I figured, hey, Rob would be good because, and you know, I've got to put this in a very succinct way. He's a man that has some experience. Now, I don't mean anything untoward about that, Rob. It's not an age thing, okay? But it was come out in our conversations that Rob has seen a few ups and downs in his time, and he's done good on the up and good on the down. So I'm going to flip over to Rob now. Rob, give us a bit of your background, and we'll have a chat about a few things.
Right. Well, firstly, I'm a guy that kind of fell into property. I wasn't born into property. It wasn't a choice I made after university. It was something that had always interested me. And throughout my entrepreneurial endeavors, something I'd always done. And whenever I'd earn a little bit of money, I thought, well, hold on, what can I do with this? Let's do bricks and mortar. I rather fancied building and developing or redeveloping old London houses, terraced houses, as I used to in the old days. And it became quite a nice little sideline, that started as a hobby. And push came to shove, and originally, well, a long time ago now, I was a bit of a technologist in the new media space. And when the dot-com bubble burst, I suddenly had a property portfolio that I'd afforded through my income, and that kept me going. And it really made me think about, wow, that's something that it's a business without realizing it was a business, but it's also something that I can help other people do. I then, interestingly, with that experience and my technology and marketing experience, worked for a big developer. And so I really kind of I cut my teeth on what big developers need to do. And bear in mind, this is a $1 billion developer, and it ended up being tax exiled in Bermuda. So there's a few stories there, but not for today. And again,
this is all in overseas, just to
this
clarify.
Well, no, but I came to Australia in 2001, and then got involved with a Kiwi private developer, and we set an office up out of Double Bay. Interestingly, in those days, we did everything via video conferencing. So this little hiccup we're going through right now is, it's what we do. Although we don't have to buy Tamberg equipment anymore, so we're saving ourselves a small fortune. But
yeah, that's right.
What was interesting there is that I learned that the real art of development and what developers want. And after a very successful run, we're the biggest manufacturer of apartments, and it's really it's a distribution business. Proper development, isn't it? There's kind of three prongs. You've got the sales and marketing, you've got the manufacturing, and you've got the money. We had a really good success of that, but GFC came and changed everything, and I must admit I had a bit of an epiphany, let's call it. And as an international halfway around the world, thought, hold on, I've got all these skills. What can I do to help people like me? And having lived through, Thatcher's recession in London, a dot-com crash that affected me personally, the GFC, that's quite a lot of skills to bring to the table, and to help people out. Yes, when they're in trouble, but what I really like to do is do it when we're not in trouble. Because to get to where we're at today, you don't get lucky overnight. You get lucky by planning. And if you do things correctly and manage your business or your affairs correctly, then there's every opportunity you can lead the curve. And essentially, that's what my business Positus does today. And taking those, so you touched upon it, the honesty part, it's really about, it's a relationship for life with clients. It's helping them in their futures. And by that, being transparent and nurturing and engaging and, just doing all the hard work on their behalf, but keeping them informed, but doing that in the good times and the bad. It's an ongoing thing. And it's a really caring thing, and I think as a result, it's a wonderful, for me personally. I wake up with a smile, go to bed with a smile. The only thing is I'm losing my hair, but that comes.
Look, I don't know how that feels, mate. That's so we got Michael checking in saying g'day to us both. Michael was looking forward to this. I talked to him early in the week, and he was quite keen to hear what you had to say. When we touch on shortly, Rob, which is some of those techniques of how to get through the down times. So, g'day, Michael. Thanks for tuning in. So, so as you said, there was at least two. Was there? There was three down times you've been through. So, what was your biggest lessons, and what? I mean, obviously you had income from property to see you through, but was there opportunities in those times, or was there things that you did differently to before those times? Like, tell us a bit about that.
Every time, I think you remodel your play and the way you do things, and I think it's interesting. I was thinking about this yesterday. What we have today is extraordinary. We haven't had something like this, I don't think, since probably 1819 Spanish flu. So
were you around then? How did you handle that?
I wasn't, but I'm feeling the repercussions today. It's interesting because I don't think that's being racist, is it? But just to keep it on topic. But no, the point is that there are global issues that really affect things, and then personal issues. And it's funny. I try and take some of the global stuff to deal with my personal stuff. And that really means just being risk averse, always having the ability to change, but stay focused on the money, stay focused on the relationships. Don't deviate. Don't come up with the next brightest, loudest thing. Use stuff that works. Use stuff that's going to invigorate what you do and help you manage what you do. And some of those things are just simple innovations, digital innovations. I remember with the big development business, we created a sales management system, which essentially you see every day now when you buy an airplane ticket. But when I put it together, they didn't exist. And that allowed me to have distribution across Eastern Seaboard Australia and around the world through different project marketing teams that I could manage and keep honest and see throughput and where we were in the workflow. And also by dovetailing in marketing and marketing spend and localizing that, we could see what was working, i.e. which phones were ringing in which areas. Mm-hmm. This was really smart stuff. This is, mid 2000s. We're really doing, and as I mentioned earlier, we're doing a lot via video conferencing, because that's the way we got in front of people. That's the way we manage people. And I think people are really learning something from this. We're being forced to learn.
Agreed.
And it's really interesting to see the results of that.
So that was in terms of, you handled it from a business perspective in terms of the downturn. From an investment perspective and the properties that you owned, and so just so I can get the timelines right, you landed in Australia at
2001.
Right, okay. So that was right around the time of the .com.
That's the reason I came. Funny enough,
okay, right.
I decided to come here to Australia because the sun shines. It's close to Asia. I grew up in Hong Kong. I kind of like this neck of the woods. It's a good outpost. It has a good future. I didn't have to learn another language, and I didn't have to scrub up on my French, which is good. So 2001, I got here because of the .com crash. On paper, I was worth a fortune. The reality was I had nothing. And I was spending more of my time chasing money than making money. And that's a really valuable lesson. So you can start with that one. It's you really need to secure your business in a way where you're going to get paid, and you've got those mechanisms in place. And unfortunately, in the old days of the online, really was the wild west of the internet. And the banks were up to extraordinary things. Companies were up to extraordinary things. It was an extraordinary time. Unfortunately, it wasn't the best of times. There were some great ideas that got pushed to the side just because of money and greed. But that happens in any new economy, any emerging economy. The bigger issue was, it all became commoditized, and the values just weren't there. And so for me, it was, let's come to Australia, pastures green, got some annuity from property. What can we do here?
So you landed in Australia with some ongoing cash flow from your properties overseas?
Correct.
They're right. Okay.
Yeah.
So when you came here, I mean, I remember that time. I think our property market wasn't was okay. It had been dead for a while, but I think it was about to sort of move. I'm just trying to remember. Was it moving then, or was it about to move then? When you
it was about to move. So it took about three years. So about 2003, 2004, it kicked off.
Yeah.
And it moved, and it went at great knots. And to be honest, even when it had its little hiccups, it was still going at great knots. I mean, especially Sydney. I mean, Sydney's an extraordinary market.
Yeah. Okay, so you were talking about an earlier time was it the Thatcher? No, was it too? What was it? Was there a downturn before that?
Well, no, Thatcher's recession was the biggest one, I guess. That was my formative years, so I wasn't investing myself, but I was watching, and quite hard, for a young man walking the streets of London and seeing every house for sale. I mean, literally, I've never seen so much signage in my life. I'll never forget it. And a lot of people in negative equity. And I guess, again, these are lessons. It's like, okay, why are they in negative equity? What are the position? What's a safe position to invest? How much capital do I need to put in? I know the banks only want me to put X in, but why don't I put X plus Y and know that I'm in a comfortable position when there's a change of pace? Because there will be.
All right. Well, let's expand on that a little bit, because I think that's a really good point. Some of those things that you learn, and I take notes as I do this, just so you know. So your equity position. I mean, just because banks or the legislative say that you can put in 1%, 2%, 5%, whatever it might be, we all know that that's probably not the safest position to be in. So from your experience firsthand, and we are talking about predominantly investment property here, because that's what you and I deal with, and of course that's where you've done your background. What are you looking at for equity positions?
Well, it's interesting. I'd say right now, rather than 20, if you've got 35. That's a really good leg up, and in many cases, don't put it in the bank. Just put it, if you've got it, put it in your offset. Really simply, but make sure it's there. We're privileged enough to be able to borrow from the banks and use them. So let's save against that, or put our savings against that. But put it in a redraw facility where you've got access to it. It becomes trading money. You can use it when you need to. I'm one for, I like to, I mean, I don't sleep well anyway, but I do like to sleep, you know what I mean? So if we can lock and load, and I'm often telling my clients, my kind of philosophy, there's lock and load, set and forget, and for every good reason. And if we can do that, it doesn't interrupt our life. It doesn't make us second guess ourselves. It doesn't take our mind off the ball at work or with our families, and it doesn't put us in compromising situations later on. And I see it so many times. The bad news stories generally come from those people that overstretch themselves in the first place. You've got to be really, really unlucky to, otherwise.
Yeah, no, that's good. So let's move to, while we're all on our social isolation islands in our own little houses, you're still working. I mean, I'm still working, you're still working. So what are you looking for? What are the questions that your clients are asking you now, and what are your answers, and what are you looking to do for them?
Well, it's a very good question. There's quite a few questions. There's been it's funny, this week not so bad, but last week I think a lot of nervousness in the market. What is going on? Is this 1 week, 2 weeks? I think everyone's really getting their heads around that it wasn't going to be over in 2 weeks. It was going to take, months. And now, the word is it's probably 6 months. So, and I'm a risk averse kind of bloke. So 6 months it is. But okay, so what are we doing in that 6 month period? Are we in the buy cycle? Are we in the hold cycle? Where are we at? So I have different clients at different levels. So I've got some who are settling shortly. And of course, they're nervous, and there's employment risk, there's there's tenant risk, but of course, I have very good relationships with my clients, but two of the developers, so we will address those with the developer and find solutions that so we can all work together.
So give us an example, like give us a live example without names and stuff.
A real live example is, a year or so ago, I wouldn't touch a rental guarantee with a barge pole because they were always built into the price. It was a marketing cost that would sit on top of the price. But because when we get a property, we get it at at the same number, the independent valuation that the construction financier has used. So that's about as risk averse as possible. As we get it at that number, we know the true value. That's our barometer on the market, rather than real estate speak or project marketing speak with their plus. And there's huge costs for display suites and glossy mags, whatever it is.
Sure.
So by us knowing that number and then going back to the developer and not changing the number and saying, okay, can you provide a rental guarantee at market rate of 4.5%, say, which is something I've done this week. Would you be happy to do that? That helps us, that helps you. And of course, they're only too happy. At the end of the day, it's costing them money. And so what we're trying to do is find little mechanisms that keep everyone happy. And of course, if you can, obviously they've got to settle and they need to be financed, and therefore they need to hold their jobs. And thankfully, everyone seems to be doing okay on my books. But what next? Is you're spending an awful lot of money. You need your income to pay the bank, and of course, compounding interest is not. I know the government have got these ideas, but at the end of the day, you want to make your money out of it and pay your debt and carry on. So. I'm looking at realer solutions that we're helping each other. Not one person is losing, which that's just a really simple example of.
And so these deals that you're selling now, they would have been going for some time. But if new clients that are coming into the market, right now, I call you up and say, "Hey, Rob, I'm ready to go." I mean, not discounting your process to get those people to that point, but you've got someone ready to go right now. What would you be looking for if you went out to look at a type of property? And I don't necessarily mean an apartment here. I mean the financial parameters around the property. Would you be looking at something that is, median price? Is it 30% below what it was last month? Like, what are the sort of things?
Great question. It's horses for courses, because we've got different property cycles in the different states. I only deal Sydney, Melbourne, Brisbane. We have different solutions for different areas. Very hard to find, say, an off the plan property in Sydney at valuation. Everything's slightly skewed in the developer's favour or the marketer's favour. Very hard. And it's like, why buy a bar of gold at 20% over the cost? This is an investment. This is a concrete money box. So we need to really start thinking like that. I have a very different solution for Sydney as I do for Brisbane. So Brisbane, we do that traditional off the plan, but we only do infill sites. We don't do house and land in greenfield sites, and we don't do apartments. So we're doing high-rise apartments. We do apartments, but close to the city in nice little boutique, oversized layouts, with a redeeming factor: parkside, riverside, something special. Or one of my little favorites these days is oversized townhouses. So you've got a big 4-bedroom home, 2-car garage, on a golf course. Premium, and in a gated community, which is a very rare thing in Australia. But from a tenant's perspective, if you're an executive renter and you've moved to Brisbane and you've got to work in the city and you've got a wife and family, you'll feel a lot safer putting them into one of those while you're at work, and I think that they yield very well. And so we're kind of looking for needles in haystacks. The Sydney solution is very different. It's buying an existing dwelling, and doing what I call a work and turn. So a three bedroom older home, freestanding, and give the thing give it an extension, a scrub up, modernize it, and so get a quick win for your investor. Obviously, there's a little bit of lag before you get a tenant in, and there's a bit of expense, but we can get a very good gain, and 20% gain, perhaps sometimes more, sometimes a bit less, but we're winning. And that's been conservative. We're winning before we start, so we can by the time the development is done or the renovation is done, they're making money, and then they put a tenant in and move forward. And funnily enough, I'm even doing this for people who want a home in Sydney but haven't got that far yet. And we're doing that kind of model. They have invested out of town, they've got other investments, and it just gives them a quick leg up, and it works very well.
So the value add, that's the value add model in the sense of, and that's right. You see that working moving forward. You just adjust your buy price and still do your value add in the next 6 months.
Again, it's adjust the buy price for sure. I mean, there is an opportunity, I think, because I know, and back to the new builds, we know the cost of construction. We know everyone's got to make a margin. Everyone's got to put food on the table. We know what they cost, so we know where we sit. With the older stuff, there's opportunity for gain, especially deceased estate, older properties held in a family. Everyone's set up. This thing's sitting there. No one's mowing the grass. It's got they need a proper scrub up, and they just want out. Some perhaps will be in more trouble than others, and and I really see there's an opportunity. Yes.
Yeah. Right. Okay. And
then thirdly is more a cash investment. So looking at, for my higher net worths who have sold businesses or excuse me a second, forgive me, I haven't turned my phone off. Who have basically money in the bank is worth not a lot at the moment. Looking for shorter terms but higher yields, and so
just explain that. Just can you go a bit more into detail on that part there.
So what essentially we're providing what a bank would normally do for construction finance. So we are helping our developer community to fund their projects, whether it be the purchase of the land or the build or both, and primarily interesting, not in the residential space. So in that side, we're looking at commercial because we can do things a lot quicker. And the type of money that's playing in that space is working its money. These guys and girls are working their money all day long. They want in and out. They're looking at opportunity. They're far more flexible. They don't want to be locked in. And there's some good product out there where they can make a good return, where the purchaser can buy at the right price. So it might be a business owner that wants to relocate into something that they own. A lot of demand for self-managed super funds, especially business owners. And I'm seeing a kind of a slight change in the style of office come warehouse that people want in the modern world, and there are a lot more niche businesses with a global reach, where niche products marketed around the world using the internet. And I kind of fondly describe them as, glass and polished concrete at the front and a roller shutter at the back. But there seems to be more and more demand for that. And when I talk to my commercial developers, that's what they're being requested to build more and more. So it seems the right thing to do. And again, we are in the solutions business. We like the set and forget and the lock and load, as it were. But we have to work with the market. We have to stay busy. If I was just to do, your traditional, off the plan residential stuff, I wouldn't be working now. I'd be tearing my hair out, and there's nothing worse than doing that. You've got to stay agile. You've got to stay. I mean, we're blessed, Scotty, we speak the language of property, and it transcends across, all all areas. So, when you're on the investment side, it's about wealth creation. It's about making money in the most risk-averse way. And everybody has a different appetite, or a different requirement, and a different financial acumen to support whatever strategy it is you're doing with them.
So you mentioned some of your high net wealths that have sitting on cash, in essence, sitting in the bank. Have you had discussions with them in the past, 2 to 3 weeks, and what are the plans moving forward? Is it just this sort of development funding sort of model, or are they looking to go and pick up some bargains, or what do they think about the return they're getting in the bank?
Currently they're thinking about other things. So I'm in there going, come on, well, when you've dealt with all of that, how about this? And they're going, cool, crikey, we like a bit of that. And I think that's because there's a little bit of flexibility. What I can see, and this is a really interesting thing, is that this is an area that I have been kind of looking and delving into quietly for a long, long time, but never at the level that I am today. And I do believe that every cloud has a silver lining, and this has given me an opportunity to pursue that. And also localize my business. It's very, you'll appreciate this. I have investors all over the country. Yep. It makes it jolly hard because I've got to go and visit people and see people, and I'm constantly in and out of the airport, etc. It's quite nice actually to have a business where you don't have to go too far. I mean, currently I'm not allowed to go anywhere, but up until 2 weeks ago, my office just off the city, I don't have to go too far to actually go and discuss some fairly good projects, which is a real blessing. And I think, as we grow older, we have to design our lives accordingly to suit ourselves and find something that works with our value system and creates the happiness that we require to keep going. And I think we're very lucky. Well, I'm certainly very lucky to be able to do that.
No, that's really good. Now, look, you've touched on Brisbane and Sydney. Michael's got a question. What strategy do you look at doing in Victoria?
Good question. Well, Victoria is becoming more like Sydney. Isn't it funny? 20 years ago, their property values were the same as Brisbane. And what we've seen is this real rise. The interesting thing in Victoria, especially, I mean, I'll just say Melbourne, because I don't do regional areas with the residential stuff, property. So the problem, Melbourne has been smashed with small apartments. It really has. And they are expensive, and developers have, they're getting a little bit of that Sydney edge. So very hard, again, to find the right property at the right valuation. So my simple solution is similar to Sydney now, is go to those nice old suburbs, little rundown corners, and there are plenty of them, and just keep looking, have your local eyes and ears on the ground, and just be in a position to move when the opportunities come. And again, this I guess this is where I wanted to end up. This whole thing about how to survive the ups and downs. It's really about preparation, isn't it? It's making sure that you are in a position to benefit from it. And I remember years ago we would sit and we would plan the down market in the good markets. Yeah. So we had a strategy that meant that we could redeploy staff to retain staff, because we didn't want to lose them because they're our most expensive asset. It gave us time to basically, so when the downturns came, we ran efficiently, effectively, profitably, and had the wherewithal to pounce when we had to. Right. And I do believe that we do have the opportunity right now. Those who are thinking in this quiet, call it a quiet time. I don't suppose people are going to be making a huge amounts of money over the next few months. There will be some markets that work very well, but for the others that can't get out and pound the pavements, it really is time to kind of plan and get those plans in place. Now, this has been kind of a little bit of shot across the bow. Yes, we thought there might be a slight depression in the market, but nothing like this. But I think to any business owner, just run your business like it's coming the next day and plan accordingly. So when it does come, you can really reap the benefits. And you don't have to look too far back to the GFC when those who were in a position doubled their wealth.
Yeah.
I mean, quite simply. And a lot of people sat on their hands, thought, we'll pick it all up when it comes back. By then, it's too late. There are others that, rather than stay focused on innovation, went out and brought the brightest, shiniest thing, made terrible mistakes, didn't work. So from a property perspective, I guess, it's let's keep those tentacles out there, see what opportunities are out there, talk to the people that work with you, your agents, your property buyers, etc., etc. Keep those communications going and get in a position that you all know that when the right thing comes, you can pull the trigger and move forward.
Yeah, that's good. It's all about being ready and prepped.
All about being ready. And I think, we'll see opportunity. I think this is going to knock a few people sideways. I mean, it already is. We've still got to get over the denial phase, but I reckon in a couple of weeks, people are going to be, once everyone's really locked up inside. And I don't know if you've been talking to friends in the States or in Europe. It's wonderful. For me, it's been a great opportunity to reconnect. I've got a little bit more time at my desk. The phone is ringing so much, but I think people will be spurred into really thinking about their futures. I mean, it could be very pivotal for people. Yeah. And I think let's all take the upside. Take what can we learn from this, and then if we learn that we need to plan and really think, but without busting ourselves, just it can be fun, and actually making money's fun if you're not stressing over it.
No, that's good. All right. Well, look, I think we've covered a lot of ground there, and I think that we've really touched on those points of, in these downward times, it's all about planning and preparation. And if you're not already planned and prepped for those times, you can do it now, right? I mean, you can start planning for the upward time.
I think that, and that's my message to people. Don't worry if you haven't. We've got a bit of time now. We are all going sideways. So bring your family units together, bring your business together, bring your friendships together, and take a deep breath and think about, okay, what's happening in the next 10 years? How can I be in the best possible position? Because many of us, when we're working, we forget to do that.
Well, we do, and this could be the perfect, hibernation time, as we're told, to actually put those plans in place, or at the very least, think about them.
Yeah, that's right. That's right.
So, mate, that's good. I've thoroughly enjoyed chatting to you today. Thank you so much
Scotty.
for your time.
No, likewise. Kind of you to have me.
It's really good, and thanks, Michael, for asking those questions, and thank you for all the other people viewing. I can see that you've got a few numbers there online, and if you want to contact Rob, mate, how do they get hold of you?
Well, the easiest thing is to look at positus.com.au. That's positus.com.au. Positus means position, place, arrange in Latin, for those of you who are just about to ask, or quite simply my mobile number, and I am the type of guy that does answer, is 0405 212 464.
Now, we go globally, so there's like thousands of people going to be calling you now, Rob. So,
well, you're going to have to edit that out then.
So, and we all knew what the Latin word for whatever it was. We all knew that. We're a very smart audience here today. Yeah. Don't worry about it.
Well,
mate,
position,
thank
really,
you. That's it. Thank you very much again. Thanks for taking time, and I really appreciate you being so open about everything, including your mobile number and your tips and hints that you're giving our viewing and listening audience. Appreciate it.
Brilliant. Nice.
All right. I'm Scotty from Zenium.property, and you can contact us if you're watching on the scroll ticker down below at Zenium.property, no.com.au. So it's www.zenium.property. All right, that's it from me, and that's it from Rob, and thanks very much for tuning in. Until next time.
Cheerio.